just recently the Ministry of Economy and Finance has issued an update on the VAT refund process, whereby it's their intention to make the process a lot more transparent, and they are trying to provide a fixed time frame as to when you can expect to receive a VAT refund. The tax department can potentially conduct a tax audit on your submitted tax returns up to 10 years after they have been submitted. Now, in Cambodia, we have 3 types of tax audit. Those audits are called a desk audit, a limited audit, and a comprehensive audit. It's not until you have completed a comprehensive tax audit that you can safely say that that particular tax year is now closed and the tax department can no longer go back and have a look at that particular tax year. A qualified investment project may be entitled to receive a tax holiday up to a period of nine years. So during that 9 years, if the qualified investment project makes profit, that profit will not be subject to corporate tax, to tax on income in Cambodia. The very key point to note about this particular incentive is that it's not what we call a true tax holiday. This incentive merely suspends the imposition of the 20% tax on income. It merely defers the application of the tax on income until such time as you look to repatriate that profit back to your shareholder. Other major tax incentive which is provided to a qualified investment project is the custom duty exemption, which is quite useful if you are looking to import equipment or construction material into Cambodia for your project. So when you import goods into Cambodia, you may be subject to 3 different types of taxes. You have your custom duty, you have your specific tax, or what some people call excise tax, and then you have the 10% VAT. So a qualified investment project would only be exempted for the custom duty element, not the specific tax and not the 10% VAT. Approximately 2 years ago, the tax department came up with a criteria by which taxpayers could be classified as either a gold taxpayer, a silver taxpayer, or a bronze taxpayer. Probably the most tangible benefit is that you are only going to be subject to 1 tax audit. So as I mentioned earlier, most taxpayers could potentially be subject to 3 tax audits, but a gold taxpayer is only ever going to be subject to 1 tax audit for the 2 years in which that certificate is awarded. So a gold taxpayer will be able to obtain a VAT refund more quickly than a taxpayer who doesn't have a gold certificate. If you take the case of a classic profit repatriation scenario, that would typically involve a Cambodia company issuing a dividend to its Chinese shareholder, for example. Now, the effective Cambodian tax rate on a dividend that's issued to a non-resident shareholder is 31.2%. And that comprises of the 20% corporate tax rate, and then an additional 14% withholding tax, and there are much more tax-efficient options that you can look at to repatriate your profit. For example, you can look at a management agreement that is provided to the Cambodia company from a Chinese company, for example, a royalty agreement whereby there may be some intellectual property registered in China, and maybe there's a license agreement between the Chinese company and the Cambodian company, whereby the Cambodia company pays royalty fees. And another option could include interest on a shareholder loan or a third-party loan. Now, just last year, Cambodia introduced transfer pricing regulations. Now, transfer pricing is a very hot topic globally at the moment because it directly addresses profit shifting. If you do have a related party transaction, you have to maintain transfer pricing documentation. Now, the Cambodia-Chinese double tax agreement will be in effect from the 1st of January 2019. Now, as its name suggests, the whole idea of a double tax agreement is to reduce or to avoid a Chinese investor into Cambodia being taxed twice on the income that is generated in Cambodia. Planning ahead for tax implication is critical. The penalties for underpayment in tax are quite severe. They can go up to 40% of the amount of underpaid tax, and the tax department will also charge 2% interest for every month that tax has not been paid. And we've seen cases, a number of cases, where the interest is higher than the underpaid tax itself. Supporting documentation for all of your transactions is critical. The tax audit officer will base their tax audit on the supporting documentation that you provide.